Okay, guys, I'm just gonna go ahead and get right into it. Hopefully, I have enough time to get everything done. But we're just gonna go ahead and go through terminology of trading. Um, so, I'm just gonna go ahead and demonstrate as I'm talking about each thing we're going over. So, I'm just gonna go ahead and log into TradingView. Okay, and I'm just gonna pick one. Euro USD. Okay. So I just got started, just for the sake of recording, I just went ahead and got started. So I was just saying that with terminology, that's what we're gonna go over today. And then also, I'm just gonna go ahead and demonstrate everything on TradingView. So full future charts. My screen isn't looking the same because I'm using a different, I'm using my desktop today. Let me see if I can, I'll just turn down to dark theme because I do like it that way. Okay, so it's a lot of vocabulary we're going over, but even if we don't get to finish within 30 minutes, I'm just gonna go ahead and move that to the next time we do a web call. So there's gonna be a part 2 when it comes to terminology, but I'll just go ahead and jump right into it. So for the first one, which is the candle, let me zoom this in a little more, yeah? Okay, so terminology. The first one is the candle. So I told you guys when we're looking and talking about candles, we're really talking about these little guys right here. So like when you look more in depth, it's not just a whole bunch of squiggly lines on a screen. It's more so like we're looking at little bars that make up the market. These little bars are actually what help us understand how the market's moving. So if you notice, we have red and green ones. The red ones simplify, simplify. Okay, yeah, Dorothy. Okay, so the red ones symbolize. There we go. That's the word I'm looking for. So the red ones symbolize the bearish movement into the market, which is shown in red and usually is shown when it's going down. And then the bullish one, which is the green one, is when the market is going up. So if you notice, like in these areas where you can't really tell if it's going up or down, or even here, one thing you can realize is that, they're fighting against each other, right? So the candles themselves make up the whole entire thing. So it would be, this is called the body, and this is called the wick. So that's the next one on the list, which is called the wick. And the wick is basically determining what direction the market is moving in, right? So one day we're gonna just take a time to just like go over candles and stuff. But so the wick, usually, I'll just like give you a quick description. The wick is usually pointing and long in a direction that it does not want to go in, right? So like, let's say the market doesn't want to go up anymore, and this is a solid red candlestick, which means that it's bearish and wants to go down. The wick is totally against going to the upside. So it's very, very long towards the upside, and then the body shows its dominance, okay? So strong buy and a little bit of a smaller wick, right? You're gonna learn all about that in the app that I told you guys to download, which was called JCP. So make sure you're studying candlesticks as well. So the next thing we're gonna go over is called the trend. What is a trend? And these are all vocabulary terms that I'm going to be using all the time, okay? So it's good if you guys like go back over this video or just really study these words. So when I'm talking about a trend, I'm talking about this right here. This could be a trend in the market, right? When it goes down, we can have a downtrend, and then we can also have what's called an uptrend as well. So this one right here, this one looks like an uptrend. See? We're going up. It's very clear. We're going down and gradually going down, which is very clear. So trends in the market are super, super important to identify. You know, it's pretty much solid. It's pretty much based off of trading, right? So like a downtrend in the market, that means you're going for a sell. And an uptrend in the market, that means you're going for a buy. So it's really, really important to understand that. That concludes 3 vocabulary words. The next one is pips. So a lot of people tend to get confused about pips. Pips, if, in a sense, is kind of like us talking about money. We're talking about how much money we're making. So if in words, if I could put it into like a sentence, I would say I caught 57 pips on this trade. So what do I mean by that? That means that whether the market was going up or down, I caught 57 pips to the upside, or maybe 57 pips to the downside, right? So it's really, it's like we're talking about money, but we're really not. Pips are kind of like a measuring tool that we use as traders to indicate how much money we have caught in the market, and then also tells you where the market is at. So whenever I say the market is at 1.13708, that means that that's the pip level that we're at right now. This is going to show you the measuring tool of where the pips are on the market. So if you want, you could just think about it as like a grid, right? So in May, I'll give you a perfect example. In May 1st, right? Let's try to get May 1st. On May 1st, we were at about 1.1201031. So that goes to show that, you know, we have recorded everything in the history of trading, right? We know exactly where it was on this date at this pip level, right? So it's really important to like tell people where the market's at too. So if I ever tell you, you know, the market's going down and you should catch it riding down to a certain pip level, that's just something to tell you guys, like, so you guys understand mathematically. So, okay, the next thing we're going to go over is Fibonacci retracement, which is actually a tool that I had you guys put in the toolbar. And it's actually abbreviated for fibs. So you can call it fibs if you want to instead of Fibonacci retracement. So it's a special tool that traders tend to use, and this tool in particular makes it really, really simple, or it kind of gives people a good idea of where the market is, or like I don't really use it as much, but it kind of gives people another strategy, another confirmation for where the market is heading. So fibs, they're basically, it works off of the golden rule. So the golden rule, you know, I believe it's 0.6, where, you know, the human being eye tends to gravitate towards, or, you know, you can see that ratio, the golden rule, in shells or in somebody's ear, or like in the structure of somebody's face. It's like the golden rule of life, and we still apply that to trading. So here it is. It's not this one. Fib retracement. So it's going to be this one right here. And basically, it just measures out these tools for us, and it shows us like where the market will most likely hit. And we'll go over this, so don't worry about that. But, you know, do you see how like in some areas the market kind of consolidates and it's kind of accurate almost? It's a little scary. It's true. So people tend to use fibs to really keep an eye on where the market's at. When we talk about key levels, this tends to add up. It really does. So I'm going to go ahead and delete that right now. We'll go over that though, don't worry. So support and resistance, right? We've talked about support and resistance plenty of times. And basically what it is, it's finding kind of like a ceiling and a floor in the market. So if I were to be marking up my chart and stuff, I'm looking for where the market's at, and then what I would tend to do is I would actually go ahead and just find like a floor. Here's a floor, right? See how it bounces off and goes back up? So that's a floor. So that's basically support. And then something like this. Oh, wait, it went away. Sorry. Something like this maybe. You see how it bounced and went back down, or maybe bounced and then went back down right here. That shows you resistance. So support and resistance is super, super important in the market. And I guess you can see how fib retracement can kind of like relate to that. If you guys have any questions or you guys need me to go over something, please stop me. Please let me know. Or, you know, even after you watch this video, just let me know, okay? Because we're gonna we have a lot to go over, and we're definitely gonna be making another video for terminologies. Okay, so support and resistance, right? And support and resistance kind of falls along the lines of key levels, because we can always look for support and resistance. We can always see, you know, this is bouncing off, these are bouncing off, this is bouncing off, and then find floors and ceilings, right? But when I say key levels, which is the next vocabulary term, when I say key levels, what I mean is that when we find that support and resistance, now what we're going to do with the 3 or 4 or 5 lines that we created around where price is at, we double tap and go to coordinates, and then we're going to round the number off to a whole number. So key levels are super, super important. One thing I always tell you guys is to trade in between key levels and not at key levels. So when we're coming to key levels, we don't, we round it off to a whole number, yes, but we look at the last 3 digits. So if you can see a number that's like 285, more than likely what I would do is I would round it off to 300. But if I saw a number like 347, it's close to 50, I would just round it off to 50. So I try to keep my coordinates for key levels. I try to keep that between, I try to pick either a 50 at the end or round it off to a whole 100th number. So let me just go ahead and mute everybody really fast. And so, sorry. Let's see. Just because when I go ahead and like upload the videos, I hear sometimes like a little noise in the background. So I just want everybody to be able to hear everything. Okay, so key levels, and then the next thing we're going to talk about is bearish and bullish. This is probably something you guys have gone over before, or like probably understand the concept of, if there's anything you guys understand when it comes to trading. Look how accurate that was, it's crazy. Okay, so, you know, when I'm talking about bearish and bullish, so a bull, like a bullish move in the market is going to be something that tends to go up, right? We call that a bullish movement in the market. When we're talking about the market going down, it's considered bearish. So for example, this is called bearish right here, okay? So I could say, you know, I could say that we're in an area where maybe I'm thinking that the market's gonna look bearish at some point, and then that's gonna probably mean like, okay, what I meant was that at some point we're just gonna keep looking at the market and it's gonna look a certain way, and then at some point we're probably gonna go down. So think of bullish as going up, and then think of bearish as going down. The next thing we're looking at is a buy stop and a buy limit. I am actually gonna go ahead and send this to you guys today. So this is actually a chart that helped me a lot. So buy stop and buy limits. So a buy stop, a buy limit, a sell stop, and a sell limit. So what I mean by that is, let's say I want to enter the market at a certain time, right? Let's say I want to enter, let me change the, I don't like the color. So let's say I want to enter the market when it comes to this level right here, okay? So what I'm gonna wait for is for the market to decide to go up and then go through the part where I said I want to enter the market at, and then keep going through it. So, oh, are you kidding me? I just lost my whole demonstration for you guys. Hold on. Yes, that's me. I wasn't logged in. Okay. Will it pop back up? No. Okay. Totally lost all the information there. That's okay. We'll just do this back again. That's okay, guys. Okay. So, like I said, let's just say that the market was going up, right? We wanted the market to go up, but let's say that I didn't know if it was gonna go up or not, but I wanted the market to at least hit this point and then watch it go up, okay? So when I say, okay, you know, I think it's gonna go up, I'm just gonna put a mark right here and say, you know, at this level in the market, it's gonna get hit and then the market's just gonna keep shooting up. That is called either a buy stop or a sell stop, okay? So that means an order placed above price, and then the sell stop would be the complete opposite of what I showed you. So an order placed below the price, and then it's just when the market keeps going through it, basically. So when I talk about a buy limit or a sell limit, I'm talking about how the order placed below the price and price then goes up. So what I mean by that, that was the one that messed up. Okay, delete that. What I mean by that is that let's say I don't want the market to go at a certain level, right? I just don't. Like, I don't want it to hit this level right here. So what I would do is I'll try to save myself, and, you know, hopefully the market would probably touch it and just bounce right back through and back up. And then the same thing goes for a sell. So let's say I don't want the market to come all the way up to here. So the market's probably just gonna hit it, and once it hits it, I know it's coming back down, okay? So that's pretty much what I mean for buy stop, buy limit, sell stop, sell limit. Erase, I'll just delete everything. Okay. Hi for now. Okie dokie. So the next thing is called a stop loss, okay? So stop losses are kind of like security for us, right? We think about it as though it's a second way to save us, okay? So let's say, you know, let's say I saw a trade, right? I was in a trade and, ooh, delete, what is going on here? Let's say I was in a trade, right? And I saw that this was shooting up, right? I was pretty proud of this. I saw it move in the right direction. But if I don't want it to come back down because I know I'm going for a buy, what I will do is that I would put something called a stop loss. Okay, so I would say that this is where I entered, right? This is where I entered the market. And then if I don't want to lose any more money from where I entered, I put something on it called a stop loss. But for me to put a stop loss, I would have to have been like maybe like somewhere around here, okay? somewhere around here. I would have to be in the market somewhere around here, and then I can actually get into my trade and put a stop loss right here so that I don't lose the money that I already gained. Okay, so isn't that awesome? Like even though you're in the market, you can actually still save yourself if the market's going in the direction that you don't want it to go to. Although we're going to talk everything about risk management, we're also going to go over like how can you like prevent something like this from happening. Well, honestly, it's everything put together that's going to bring you there. So, you know, I just want you to know that this exists. It's called a stop loss, and it really does help you. And so, you know, this is for a buy, right? The same thing goes for a sell. So let's say I enter the market. I enter the market right here. I notice that the market's, you know, looking pretty good. I'm gonna keep going for it, going for it, going for it, going for it. And then, you know, I'm in a good place. I have collected, let's see how many pips have I collected. I collected 13 pips, right? I don't want to lose my 13 pips that I've already gained. So I put a stop loss right here. And then I'm just watching the market keep growing and growing and growing and growing. My account's growing. And so I'm protected because now I put a stop loss on my trade. So now I'm safe, right? Okay. Next thing, we're going to go over take profit. So let's say we did our entry. We got into the market. We set our stop loss so we don't lose the money we already gained. And then the market's going, going, going. And let's say I have a goal, right? I know that at somewhere around here, I'm going to make the money I really want to make. Or maybe even around here, I know I'm going to make the money I want to make, right? So I know that when I continue into the trade, at some point I know I want to get out, right? So we call that take profit when we decide that, you know, we made profit, we're ready to take it and get out of the market. That's called take profit, aka TP. So there's several take profits that you can have. There could be a take profit 1, there could be a take profit 2, and so forth. But just to show you guys that that's pretty much how it works, that's what we call it, a take profit. So the next thing we're going to go over is called consolidation. Mac mices are like crazy. Okay, so the next thing we're going to go over is something called consolidation. Okay, so I'm going to show you perfect examples of what consolidation is. And this is a time when you really do not want to trade at all, okay? You don't ever want to trade in consolidation. So let's say you see a trend, right? You see trends in the market. You see when it goes up and down, goes up and down, goes up and down, goes up and down. See, that's very clear, right? But a few things you really want to avoid is something that looks clustered like this. You really don't want to get into the market when it looks this clustered. It's actually really, really bad too, because you honestly don't know where the market's heading, and then, you know, you more than likely you can lose out on a trade. It's not something you want to be in. It kind of messes with you emotionally if you take money very emotionally, and that's something you're probably going to learn as a trader. So you really want to just be careful about that. You want to make sure that you're not getting into those, okay? Those are very serious. That one looks pretty scary. Don't do it. Not cute, okay? I'm trying to, there are littler examples, but those littler examples are very, very little, very minor. I'm trying to look for some very serious ones, like this right here. This is not fun. And we'll go over like how you can indicate that they're coming, or whether or not they're moving in the right direction. We'll go over stuff like that. Everything will come together. We'll piece it all together, and I'll show you like how to avoid those. But yes, so you don't want to go through these, trust me. Okay, so the next thing is called the double top pattern and the double bottom pattern. So we've actually gone through this before. We talked about this a few times. Let me go ahead and look for one really fast. I'll go in the 4-hour, see if we can find something a little better. Okay, let's see. I see a few, but I want to look for some I want to look for one that's very clear. Zoom out a little bit. I see an example for the next one, but let me just draw it out for you guys because I wanted to give you guys a clear one, but they're not always going to be very clear. So make no mistake. Sometimes the market tends to do like these random M's in the market, or they might even be W's in the market. And so these patterns are super, super important for when you should get into a trade and get out of a trade. I would say that they're really great for beginners, or like, you know, just even if you understand what they are like now, you could still like utilize these to your best benefit and just like get into a trade and, you know, just ride it out. So what I tend to tell people is, you know, if you're going for that last trade, you would probably enter right about here and then keep watching it go down and then get out a little above the last time that it was down, okay? So a little above the last time that it was down. I hope that makes sense. So you would pretty much catch this right here, and then same thing for this on the opposite side though. So you would probably start right here and then get out a little above the end of the last time it went down, okay? So that's a double top and a double bottom pattern. Super, super handy. And then the next thing, where is it? Okay, here it is. So I'm going to be using this tool quite a bit sometimes when I'm talking about this. It's called a heads and shoulders pattern. So is it on my, yes, it is on my bar. Great. Okay, so I'm right here. I'll draw it out for you guys. It's not perfect. It's never going to be perfect. Hopefully this one's good. Yes, ma'am. Okie dokie. Okay. So this right here is called a head and shoulders. So it pretty much created two small peaks on both sides and one tall peak on the upside. Usually when you see these, you're gonna have an extreme movement to the opposite side. So like, let's say it's coming down, it's really gonna start coming down, but you can also see it upside down. Oh, here's a good double bottom right here. That's perfect. Sometimes you can see the heads and shoulders upside down, and so that means that the market's actually gonna be moving up gradually. So just keep that in mind. Super, super handy when it comes to you jumping into the market for the first time. Those two patterns, the double top or the double bottom, or the head and shoulders inversed or upright, okay? So the next thing is leverage. We've talked about leverage, I believe, in the second video. Leverage is also very, very important because it also helps you grow your accounts. The broker actually offers you more to yourself when you enter the market. So like, you know, you put down something, you have to put down something. So like maybe $50, maybe $100. And then the broker is like, okay, so we're going to give you leverage. And then that leverage allows you to make a lot more money than what you originally started off with. So, you know, just go, if you forget about this and what it means and you want more of an explanation, just go back to that video. I believe it's the second video. It's all titled. So for this, I don't really have to do any more demonstrating. For this, we're just going to go ahead and talk about it. a little more in depth. So we are talking about major pairs, okay? Major pairs. So there's several different pairs in the whole entire world that make up the market, right? These right here are the most major pairs within the whole entire world, okay? So you have these traveling in and out of different countries via technology because, you know, everything's operated through the market, which is digital. So you have currencies that dominate a lot of others. Like, you know, you would never see the rupee appear. You would never see the Singapore dollar, I guess, appears, you know. So these are actually the major ones, and we're going to talk about these all the time. So the US dollar, of course, is one of the major pairs. The CAD, which is abbreviated for the Canadian dollar. AUD is the Aussie. Sometimes people call it the Aussie. The Europeans like to call it the Aussie. And it's actually the Australian dollar. The British pound, which is abbreviated for GBP. The euro, which is EUR, EUR. And then the Japanese yen, so JPY. And then NZD, which is the New Zealand dollar. There's a few, I believe the Danish kind of goes with it as well, but it doesn't really make up, like, these are the most important ones, okay? So whenever I'm saying, oh, you know, maybe you should look for the pair UCAD, right? Or USD CAD. That's what I mean. It's like, look for that pair and see if you can get into a buy or sell, right? I'm literally, everything we talked about, I'm literally going to be using all of these vocabulary terms. And so, you know, it's good that you guys learned that first. And then after that, you know, everything's just going to start making sense. So I might say, look at UCAD. I like to call it UCAD, but when I say UCAD, I mean UCAD, okay? Sometimes it's USD CAD, and I would say look for a buy or a sell. And then other times I might say look for AU. So AU. Okay, I'm going to stop doing that. Or AUD USD. And sometimes I'll just say, you know, just EG or UJ or UN instead of USD NZD. So just keep that in mind. Like, people abbreviate it all the time because it's like so much effort to say USD NZD, you know? Okay, so we don't just trade currencies. A lot of, like for me to explain to people like what I do exactly, it's really complex. So I really do try to make it very simple for people. But yes, these are the pairs that I really like to trade. I focus more on the US dollar because we always work with the US dollar. Sometimes CAD, not really AUD. If I hold AUD, I'm looking for a swing in the market. So I'll do AUD for that because it's very slow. And we'll talk about the movements at some point. That's when it gets more fun. GBP, I love GBP. And GBP and Euro tend to move in the same way together. So if you're ever trading Euro, you're probably going to look at GBP and see that it's doing the same thing. Not perfect, but sisters. And then JPY, I know a lot of people are fans of JPY, but I'm not always trading it. Just for personal preference. But I love NZD CAD. I love NZD USD. Euro NZD is one of my favorites. Euro USD is always my demonstration. I love it. So yeah, you guys are going to learn which ones you really like the most too. And then the next thing we're going to go over is metals. So it's not just, like I said, it's not just currency that we're going over. We're also going over metals. So you can trade literally silver, you can trade gold if you wanted to, and you could trade the platinum if you wanted to. And I believe copper, but I don't think it's abbreviated at all. I think it's just copper. And I don't think you can trade, I'm not too sure, but I don't think you can trade copper with anything else. I think you just trade copper separately. Which reminds me, you can actually trade these alone, you could trade these without having to pair them as well. So, you know, sometimes I might just like how the US dollar is moving alone, and I would just like trade the US dollar index alone. So that's okay. You guys just pick and choose whatever you guys like when it comes to that point and you guys understand what you're actually doing. So cryptos are actually fun. It's very volatile. Crypto is very volatile. And you know, it's a great way to actually expose yourself to something different other than just like currency pairs, because currency pairs, it's a good start for a lot of people, and you know, it's effective. But cryptocurrency, just when it moves, it's like like it's like moving. Okay, so cryptos, there's Bitcoin. There's two different ways that they abbreviate it. So Bitcoin, there's something called Ripple, which is a part of crypto, and then there's Litecoin as well. So you know, these you can also learn about as well. I know some educators who actually still go over this too. But for now, what I'm going to do is I'm going to teach you guys a little bit more about this. And I actually forgot one. It's actually my favorite. It doesn't really fit into a category. Okay, Dorothy. Okay. It isn't. Okay, whatever. It is. Dang. What is it called? What is it called? US 30. Thank you. Thank you, brain. So it's called US 30. So it is Wall Street. So Wall Street, US 30 moves like crazy, okay? Like it moves kind of like crypto, but personally I just like it because I know what I know. I've known the US dollar for a while, so I like to trade US 30. It moves very, very volatile. And when it shoots up, it shoots up. When it shoots down, it shoots down. Bitcoin, if you got my, I really don't want to say my opinion on stuff, but Bitcoin, I would say it's a little bit more choppier. So like the movements are kind of like up and down, up and down, up and down. But US 30 is more like boom, boom, boom. Oh, okay. I didn't ask for that, but thanks. Okay, so Bitcoin, US 30, if you ever just want to like check it out on your MetaTrader 4, you know, by all means, just take a look at it. Doesn't hurt. Gold. Gold is, I have a few friends who love gold. Gold is great. You know, when you guys start to advance a little bit more and like you get into your trades, doing currencies, you know, we could then probably talk about gold, the movements and stuff. I know Josh on here, I know he likes gold. He likes the way it moves. But yeah, guys, I think that's everything that I had to cover for today. We are actually definitely gonna do like a part 2 for this because it is a lot of vocabulary and you know, it's a lot to take in. So hopefully you guys just like understood everything. I know like I really had a lot to explain to you guys, and I wish that I could have done it a little bit better. But let me know if there's anything I can go back over. I would probably include it into my next video, and then we'll just say, you know, these are the ones that you guys picked out that you don't fully understand, and we'll just go back over it. So doesn't hurt, and doesn't hurt to ask me questions either. Please just reach out to me. I don't mind doing these sessions alone with you guys, like, you know, at certain times, just let me know. So, you know, we can talk a little bit more about what you're confused about. But pretty much everybody's going at the same pace. And hopefully I'm not bombarding you guys with too much information. I don't want you guys to feel like you're falling behind because I know life happens. But that's why I recorded the videos. So you guys could always like take a look back at them and just like figure out what you're missing or what you don't comprehend. And then after that, you know, we can just get together and just make it happen. Make sure you guys understand. So that's really my goal, is to be clear and to really help you guys understand how the markets are moving and, you know, the terminology and stuff like that, tools you guys may need. So that's what I'm here for. I'm here to help you guys. I love you guys so much. And we will continue for the next session. Looks like we did great with time. But yeah, thank you guys for hopping on. Appreciate you guys.